Good evening, everyone. A very warm welcome to the first quarter FY22 conference of Tata Consultancy Services. We have the management standing by. So today we have with us Rajesh Gopinathan, MD and CEO.
Good evening, everyone.
We also have SBS and Subramaniam, COO.
Hello, everyone.
Joining for the very first time as the CFO, Samir Seksaria.
Good evening, all.
And of course, Milind Lakkar, the CHRO.
Hi.
Without further ado, I'd like to pass it across to Rajesh for the opening remarks. Rajesh, the floor is yours.
Thank you, Kritika. And thank you once again, everyone, for joining this conference. The quarter gone by has been one that was finely balanced between a health crisis and business opportunity. In the last 90 days, despite our best efforts, we sadly lost many TCSers and their loved ones. It's a testament to the passion and the dedication of our teams that despite such a tragedy, we have been able to work effectively as a unit and continue our business operations. It's a privilege to lead this team, and I want to place on record the deep appreciation that we have for each and every TCSer and everyone who has stood by us in this challenging period. The quarter, as I said, is a finely balanced one. On one side, we have had strong growth from our core markets, whether it be geographical markets like North America, which returned to significant growth, and overall, our core markets and core verticals grew by 4.1% in constant currency terms. Our challenges in emerging markets, primarily led by India, resulted in our overall reported growth being at 2.5% in CC terms. I'll get back to the segment details a bit more slightly later in this conversation. I'm also happy to say that our operating profit, despite our investments in employee benefits and our rolling out wage hikes and promotions as a normal schedule, we were able to maintain operating profit at 25.5%. And we also generated strong net profit at 9,008 crores, which is at 19.8%. Our cash conversion continues to be strong, and we converted 114% of our net profit into operating cash, reporting a cash from operations of 10,296 crores and ending the quarter with 55,000 crores of cash in hand. As I said, the most encouraging aspect of the performance this quarter has been the strong growth in core markets like North America, which grew 4.1% on constant currency terms, and UK, which continued its growth over the last few quarters, registering 3.6%. Europe, coming off a very strong growth in Q4 of 8.5%, went into a phase of consolidation and grew at 1.5%, which is 19% on a year-on-year basis. Key verticals like BFSI also strongly got back into the growth trajectory, registering a quarter-on-quarter constant currency growth of 3.1%. Retail and CPG continued its growth momentum despite the significant impact that COVID had on this industry vertical in the first quarter of last year, and now registered its fourth straight quarter of strong sequential growth, coming in at 4.4% on a constant currency basis. Life sciences has been a pillar of strength for us and continued to deliver a very good growth momentum, growing at 7.3% on a quarter-on-quarter basis. Most encouragingly, this business growth is translated into very strong customer portfolio with customers across all our revenue bands growing very well. Our total customers in the 100 million plus revenue band grew by 2 on a sequential basis to 50. And you will see this growth across customers on all revenue bands. In fact, when you look at our customer portfolio now, it has surpassed our pre COVID highs and shows the strength of the recovery that we are experiencing in our core markets. I spoke about the weakness in India, which where we have multiple business models operating, and some models like our platform BPO, platform Ion business, bore the brunt of the COVID crisis that engulfed the country and dragged down overall business performance, degrowing by 14% across ION as well as our public sector businesses like the Passport Seva project and other private sector businesses. We have seen recovery in the Indian business towards the end of June, and if this trend continues, we are hopeful that we will see an equally strong snapback in the quarter coming. However, we remain very watchful of the situation around us and will be very vigilant in dealing with the emerging health situation. On the health side, we have significantly invested to protect our employees and support them through this period. Our focus this last month and the last few months has been to significantly drive on the vaccination side. And I'm happy to say that now more than 70% of our associates have received at least one shot of the vaccine. And we are committed to ensuring that we go through with the vaccination plan to the full extent possible. It's been a quarter where our investments in other areas that we've spoken to you about, like innovation, continued at pace. Our focus on IP creation resulted in our total patents filed inching closer to 6,000, with 110 patents filed during this quarter, and even more so, more encouragingly so, 121 patents granted this quarter, bringing our total patents granted to 1,971. Our ability to attract and retain the best talent continues, and we recruited almost 38,500 people this quarter and crossed a total headcount of 500,000 associates, coming in at 509,000 at the end of the quarter. Our industry-leading retention continues with with an attrition rate of 8.6%, which is slowly ticking up in response to the overall demand environment that we see out there. So, in conclusion, I would like to once again commend the efforts of of TCSers that helped us bring these kind of business results to you, and place on record our gratitude to all our friends and associates who helped make this possible. With that, I turn it back to you, Kritika.
Thanks, Rajesh. We'll start the question and answer session now. Just would like to ask everyone to be on mute so that the quality of the conference isn't affected. Unmute yourself when we ask you to. The first question is from Sajid Mangat from Bloomberg Quint. Sajid, you can unmute yourself now.
Yeah, thank you. Good evening, Rajesh. It seems to be there has been headwinds which you haven't factored in at the beginning of April, and that's the reason why the performance is below street. If you look at the EBIT and the profitability there, what is the kind of outlook you see for revenues going forward? You had mentioned that you're going to achieve the double-digit growth in FY22. Are we on path to achieve that? From a geographical business point of view, if you can give us an idea of how Europe is doing. You spoke about UK doing well there, but how Europe is doing, and in the US, what kind of traction are you seeing in the businesses which is coming in, though it's growing at more than more than 4%, if I'm not wrong, and in the BFI space especially, where are we seeing a good amount of traction coming in, and the TCV which we have been building up over the last 4 quarters, what kind of conversion rates can you see there? In the margins front, if you can give us an idea of where is the pressure coming on the margins on a quarter-to-quarter basis, and do you see sustaining margins at this level, given the full impact of wage will come in the subsequent quarters as well?
Sajid, I'll try to answer one or two of your questions, and I'm sure during the rest of the press conference, many of your rest of the questions will be also answered. Let me start with what you said about whether we had anticipated or not. Obviously, we had not anticipated. As I said, the if you look at our results, it's a story of two markets. We have the core markets which are growing very strongly, and we have primarily India market that has been significantly impacted, degrowing at -14%. And I think we were not alone in not having anticipated the viciousness with which the second wave engulfed India. As I said, our SBWS model allowed us to perform effectively for our international customers. But businesses that were local, and especially businesses that required presence, like the ion business that I spoke about, were understandably impacted. Our total impact is in the range of about 350 crores of revenue lost during this quarter from our India business. And it's not just ion, it is other businesses that we do here. As we look forward, we are seeing the same data sets that you are seeing. June has seen some amount of stabilization and recovery. And if the health environment continues to improve and stay at where it is today, I have no doubt that we will be equally bouncing back in Q2. But we are staying very vigilant and looking out on that. On the core markets, strength in North America has come across all our core sectors, BFSI, retail, manufacturing, where we have seen very significant ramp-ups. Europe, again, as I said, you need to see it in the context of the growth that was there last quarter. But overall, we are very positive in terms of deal signings and deal closures in Europe. And we see good traction building there, though the period of consolidation might continue for a quarter or two while we normalize that base effect. So overall, we remain positive across markets. And as I said, probably we'll get back to some of your other points during the course of this conference.
Thanks, Rajesh. Request all the journalists to stick to 2 questions, please. And once you unmute yourself, do let us know who you're directing the question to. The next question from Reema Tendulkar from CNBC TV18. Reema, you can unmute yourself now.
Gentlemen, good evening, and Samir, it's lovely to see you, in the press conference today. Rajesh, the first question is, if you could provide us some indicators of your success in the consulting business, which you had flagged off last time. Any indicators, perhaps in terms of TCVs? How do we start tracking your consulting success? And secondly, with cases rising in UK, do you fear an execution risk increasing over there? Apart from India. And Samir, my question is, first, if you could just provide a breakup of this 130 basis points decline in margins, and 2, what are the timelines of travel-related costs resuming for the company? Thank you.
Reema, we had indicated that our service portfolio will continue to evolve. And as we build on our base of contextual knowledge and keep pushing into what we call the growth and transformation part of our business, more and more consulting skill sets will be brought to bear. And we believe that that will allow us to eat into that segment. We are not tracking consulting as a separate segment, but more looking at GNT as a new area that we are seeing as a sequential growth or a adjacency growth. So we will not be breaking that out, but as you will find in the various commentaries that were shared in our releases, you will find lots of examples of where we have been able to move. One big area where we are seeing a lot of traction in the current environment is in the area of mergers and acquisitions, both in terms of acquisitions and integration, as well as in terms of diverse teachers and carve outs. We have shared many such examples, but typically these used to be done from an outside in perspective, whereas we have been able to use the contextual knowledge that we've had for customers. For example, we have shared one of a pharma major in US, a biopharma major in US, where we have been able to accelerate their roadmap for their synergy realization because of the contextual knowledge that we have, and therefore participating very effectively in the overall acquisition integration planning and going beyond what we used to typically do on the technology side. So that's the kind of examples, and there are many, but it will not be quantified as a separate revenue segment. I forget what the second question was.
I think the second question, I'll take up the margin one, and then if there's a follow-up one, we'll get back. On the margins, Rima, as you know, Q1 was at 25.5%, and Q4 was 26.8. The 130 basis points is broadly impacted by 170 basis points coming in from the salary increments which we gave effective 1st of April, and offset by 30 basis points from exchange. We had the revenue impact was 150 basis points on the revenue side on exchange, versus that gave a 30 basis points positive benefit on margins. The second question you asked was on when would various spends come in. So if you look at Q1 itself, quite a few of discretionary spends have started seeing an uptick. And over the period, in the next 3 to 4 quarters, we would see a lot of the discretionary spends come back to the pre-pandemic level. Travel might take a little bit here and there, but most of the discretionary spend we would see coming back by the end of this year.
Thanks, Rajesh. Thanks, Amir. The next question from Poonam Sani from ET Now. Poonam, you can unmute yourself and, of course, restrict yourself to 2 questions, please, and let us know who the question is for.
Right. Thank you so much for that. In fact, Rajesh, my first question to you is, at the last quarter, you had mentioned that you were confident of a double-digit growth. Given the scenario that we are seeing across India and across various other countries on account of the COVID-19, would you retain this this expectation of a strong double-digit growth? And also, B, what is the deal momentum? Is it the $8.1 billion of deals order book? Is this momentum across various verticals that you're operating in? And one more question is to Samir. Samir, what do you think in terms of the margins? We are at 25.5% in terms of the margins. Do you think that the uptick in the attrition level that management had just alluded to, would we see that margin band of 26 to 28%? Would you be able to, protect that? That's it.
Poonam, as I said, what we have seen in this quarter is very strong growth along our anticipated lines in our core markets, both geographical markets as well as vertical markets. And the softness that we have seen in India is a one-off situation. While it is subject to what happens on the overall health side, based on where we are today, we think that there should be a strong bounce back in the India business, and our overall expectation of a double-digit year continues to be maintained, given the comparison. So that trajectory is not, I don't think, is compromised by the one-off that we saw in the India business. And one of the big reasons for it is what you alluded to, the strong deal pipeline that we have seen. Um, Once again, we have crossed $8 billion in TCV signings in this quarter, and it is very well distributed across all our markets and across deal sizes also. There is no single mega deal that is driving it. It's a full portfolio across markets ranging from Australia to the US and across verticals. So, seeing that deal momentum, seeing that pipeline strength, and also what we have reported, I feel that the trajectory that we had shared is quite safe. Margin, I think Samir answered it, but maybe if you want some clarifications further, Samir.
Sure. Poonam, so to your question, I'd like to highlight our Q1 margin is usually impacted by the increments which we come in. But if you look at our last 5 quarters Q1 margins, we are coming in at the highest margins in Q1 FY22 at 25.5. And it should also be seen in the light that it was impacted by, so while the core markets were very strong, there were softness in other markets, and like previous quarter, we have borne the entire brunt of it without any things on the other side. Keeping while it's difficult to forecast, or I'd not want to focus into the next period, but structurally I would say that our overall we should be able to sustain our margins into the aspirational band which we have set out for ourselves.
Thank you. The next question from Swati Murthy of Moneycontrol, who's joining in from audio. Swati, you can go ahead and ask the question. Please let us know who is directed to.
This is to Milind. It's about the crossing the 5 lakh milestone. So if you can share a comment on that, and along with that, see the deal signings continue to be high. So if the company can share, how do you plan to manage the talent? I know TCS, nurtures talent internally, and last time also you had commented that you would be able to. But given the war for talent we are seeing and the high deal signings continuing, if you can share a little more on that. And now to Mr. Rajesh, do you see this deal momentum continue even in the coming quarters? And has the nature of the deals and the scope of the deals have changed? And if so, by how much? And how has it changed? If you can share a little light on that. Thank you.
I think it's a very proud moment for us to cross 500,000. I was there when we were less than 5,000. So, it is just amazing to see where we are at right now. And it's an amazing build-up that has happened over the years. And we are very proud to have as one TCS family, and during these tough times, even more so, we came closer together, and wonderful to have achieve this milestone. And this journey continues to go on, and we continue to add people, bring them to our family, and continue to grow, deal to deal, people to people. Rajesh, for the deals question, please. Can you hear me?
On the deal momentum side, we think the momentum is strong and should continue into the foreseeable future. The nature of deals is fairly distributed. You're seeing the full spectrum from large deals to small transformation projects. So that is also a healthy sign, because it is not dependent on one single type of deal or a few very large ones, but it's a fairly well distributed set. So overall, the deal pipeline looks quite encouraging.
Thanks, Milind. Thanks, Rajesh. The next question from Alnoor Pir Mohammed from the Economic Times. Alnoor, you can unmute yourself now and ask your question.
Thanks for taking my question. Rajesh, would like to know, do you expect to see any impact coming because of the increasing number of cases in UK and Europe, right? And the second question is, you did speak a little bit about the deals, but what are the types of deals that y'all are seeing in the market today, right? Especially in the large deal space.
Sure, Allur. Thank you for bringing that UK question again. I think that is the one that I missed with Rima. And I'll let NGS after that talk about the deal nature of deals. On UK and in other markets, including India, we remain vigilant about what is currently going on. I don't think anybody has a very clear view of what's happening. So our approach has been to bet on vaccination, and we are significantly both enabling it as well as encouraging it across our employee population and our extended family dependents of employees, as well as the other ecosystem that works with us. While nobody can be sure about what is the final the absolute solution, but definitely we believe that vaccinations is going to be a big part of the path towards normalcy, and we can look to places like the United States, which once it has achieved a very high vaccination percentage of its adult population, you can see the benefits to the society, both in terms of well-being as well as economic activity. So I believe that's the only viable, practical, pragmatic model that is out there, and we are backing that strongly while remaining vigilant about everything that is unfolding around us. I'll turn it over to NGS for discussing about the deal pipeline.
Thank you, Rajesh. Overall, this quarter has been a phenomenal quarter for us from a deal signing perspective. It's been a very broad-based deal signings, as Rajesh pointed out earlier, across markets, across verticals. And it came up without the back of any, not having any big, large deal, right? But having said that, look, the quality of deals that we have got in this particular quarter has been very, very satisfying. And the fact that we have been able to achieve this all remotely is even more gratifying, right? It's a full bag, it's a complete core systems transformation, for a large bank in Europe is one that comes on top of my agenda, which comes on top of a complete mainframe-based cloud replatforming that we did for their systems. This is really about transforming their core across deposits, loans, payments, and so on and so on. Likewise, for a large entertainment company, we have got the opportunity to reimagine and develop in a very, very rapid, agile mode, a complete new OTT platform, right? And that's something that is, again, a very big opportunity. Overall, across the markets, what customers are looking at is investing in growth, right? They need to really, that's the theme that we see, adopting cloud, adopting automation, algorithms, customer experience, digital technologies, all are bundled into each one of this. But investing for growth, investing for the future is the biggest theme that we are seeing. Okay.
Thank you, NGS. Thanks, Rajesh. The next question from Yosuke Hanada from Nikkei, who's joining on audio. Yosuke, you can take your question now. Yosuke, you can unmute yourself and take your question.
Can you hear my voice?
We can hear you. Go ahead.
Yes, we can. Please go ahead.
Okay. What kind of business was especially doing well in the North American market? And do you feel difference of the business demand by region? And secondly, despite the travel restriction and visa restriction, last few years revenue ratio by region has not largely changed. And could you please explain the detail of how remote working technology and solution such as SBWS help the employees to participate overseas project from India? Of course, I understand that TCS has expanded to local recruitment, but I'd like to know how remote work solution promotes the working across the borders. Thank you.
All right. I will address the demand side and then ask NGS to take care on the SBWS aspect that you brought out. So the North American demand recovery has been quite broad-based. We are seeing, themes which we have shared with you in the past, like significant adoption of public hyperscaler platforms, driving growth in BFSI space, where we are seeing a large amount of workloads starting to migrate onto the public hyperscaler platforms. NGS touched upon the mainframe modernization as a theme, and that is also starting to resonate strongly across many of our customer universe. Customer experience and employee experience also is a big area. When the pandemic hit, there was a large scale investment in creating digital collaboration platforms. And initially, effectiveness was the primary driver, and rapidly security became a big issue. But now the focus is more and more on overall employee experience and overall partner experience. And that space, in terms of significant investments in rethinking the future of these kind of work collaboration platforms and employee engagement platforms, is also driving growth. Uh, so whether it is cloud, whether it is experience, whether it is reimagining supply chain and configuration for agility and resilience, there is growth coming across all dimensions. And you see this across industries. I spoke about banking. I spoke about the very strong snapback in the retail side. We are starting to see increasing traction, especially in North America, on the airline side, and manufacturing has come back strongly, especially on the automotive side. We are seeing strong traction building up. So that's the kind of nature of demand that we see. I'll let it NGS talk about SBWS and implications of remote working.
I think the last 12 months, since we first rolled out secured borderless workspaces, it has just gone from strength to strength. And it has proven its worth, specifically during this last 3 months, when India really had a very severe second wave. So that, a lot of customers have openly endorsed about the robust and resilient and secure nature of secured borderless workspaces offerings. And they have actually, some of them asked us to see whether they can adopt SBWS in their own organizations. And as we speak, we are helping customers to actually adopt SBWS as well. In the last 12 months, since work has gone remote, we have not been not just executing the projects successfully, but we have also been creating new offerings. We have been bundling our offerings. We have been bringing the one TCS together to bundle the offerings to customers at large, so that it becomes a lot more meaningful, a lot more cohesive, and addresses the problem that they want to solve much more rapidly using our location independent agile techniques. So overall, I think the secure borderless workspaces is we feel it's here to stay, and our own belief of this 25 by 25 operating model that we announced is something that we are committed to. But having said that, I think in order to strategize that better, in order to see what is the best way to operationalize the 25 by 25, as things open up, as things become safer, we do believe that certain amount of work, return to work, will happen, and the hybrid model, as the world calls it, will probably stay for a longer time to come. Right? And the relevance of SBWS is something that I truly believe in, and a lot of our customers believe in, a lot of our employees believe in, and that is going to lay the foundation for a hybrid model of the future.
Thank you, gentlemen. The next question from Harshada Sawant from CNBC Awaaz. Harshada, you can unmute yourself and ask the question.
Thanks, Kritika. Good evening, gentlemen. I just want to understand from Milind and NGS two particular points. Milind, beginning with you first. Last time when we spoke to you, specifically said that yes, there is supply side tightness, but it's not a major concern. But with attrition hitting 8%, is that a bigger cause of concern? How do you plan to stem it going forward? And is it likely to have an impact on margins going forward as well? NGS, to you, if you could give me an understanding as to what is the value of deals that you're clocking, especially in BFSI and retail, as well as life sciences, beginning to look far better than it was in the last few quarters? And do you see revenue contribution from life sciences growing in the coming quarters? And if you could also just talk a little more about how confident are you on the double-digit growth guidance that you've spoken of in Q4?
Harshada, let me take the first question. Our margins are at basically currently our attrition at 8% is in a way artificial primarily because of pandemic. And that number normally what we are at is about between 11 to 12% is normally which we are operate at. And even if you look at the past quarters, in the high demand situations, we actually go even up to 13, 14%. So I think the point is, that attrition is definitely going up, and there's an uptick we are seeing there. And but it is a very much part of our operating model. We obviously make all our efforts to retain the best talent in the organization, and we continue to do that. We make all the efforts to do that. But overall, the effect of attrition and the fact that if it goes to double digit tomorrow, it is very much part of our operating model, and I don't see it as impacting our margins in any significant way. As we have a very strong operating model to drive it.
Hi, Harshada. I'll take up the deal momentum that we have. Overall, as I mentioned, the deal closures have been very, very broad-based, and BFSI continued to lead the show there. And then we had fantastic closures in retail. We had fantastic closures in media and information sciences. Very good growth in technology and services businesses. So overall, I think it's a very, very broad-based growth and very, very broad-based deal signings. And all these verticals, if you really look at it, sequentially, they have done really well. And even so, if you take the year-on-year growth as well, almost all of them, except the regional markets and others that we called it out separately, everybody else has grown, significantly. And that augurs well for us. And I think, both Rajesh, I, and as a management team, we're all committed to driving that double-digit target that we are seeing. I think there is a very good chance that we will be there. Right? There's absolutely, there is something that we are committed to get to the double-digit growth path that we all want to. Right? And on a overall BFSI itself, I think there are mixed opportunities of both cost and optimization. People look for first-time outsourcing. People look for second-generation outsourcing. Those kind of deals are there, as well as typical growth-based investments that customers are making.
Thank you, Milind. Thank you, NGS. And finally, the last question from Kushal Gupta from Z Business. Kushal, you can unmute yourself and direct who the question is for.
Sure. Yeah. So my first question is to Mr. Rajesh. Rajesh, with regards to the kind of demand which we are seeing now for digital transformation since the pandemic has happened quarter on quarter basis. So I just wanted to understand this. Amid this, the kind of demand which we are looking at, how are we looking at to increase prices of the deals probably going ahead, maybe in the next few set of quarters? Are we looking at that? And my second question would be to NGS. So I also wanted to understand in terms of the overall pie which is still left. So right now, like before digital transformation started to happen, like maybe to accelerate post the pandemic, how much of it was left and how much of it has been covered so far in terms of percentage, and what's the opportunity size which we have right now, because every small and medium organization is also approaching I think majority of the IT companies in terms of transforming themselves into a digital platform. So they are actually planning to have a parallel platform with that. So just wanted to understand on these two aspects.
Kushal, I think your question is a very valid one, but I want to answer it by talking about what our business model is. If you look at our total business, we have about 1,118 customers, and we make almost 98% of our business comes from repeat business from these customers. So the business model is built on building very long-term stable relationships with these customers, and then gaining their trust and moving that relationship up the revenue bands that we keep reporting every quarter. So our pricing strategy is built on this long-term view. It is by committing to the customer that we'll continuously invest in keeping our talent pool relevant and refreshed, and investing in retraining, investing in reskilling, investing in hiring the best talent. The pricing overall is something that we actually provide comfort to the customer that it is a very stable and bankable partnership that we offer. And that's the kind of nature of relationship that we both seek as well as nurture. So you won't see our pricing being very volatile just because a given skill set in a given year or two is going to be significantly more in demand. Tactically, in the market, there might be some amount of ups and downs at a deal level, but at an aggregate company level, our pricing trends are very, very stable and non-volatile, if I may put it that way. I hope that answers that, and I'll let NGS talk about the rest of it.
Yeah. Thank you, and I think we stated some time back that cloud is the new ERP. And we also stated that at some point in time, everything that we do will have a significant amount of digital technology in it. Right? And that's one of the reasons we said that, look, it doesn't make sense to actually call out separately what we do as digital. Right? So I think that moment has come. That everything that we do today has a significant part of digital technology, and as you rightly pointed out, everybody is adopting digital. Digital as people say digital in the front. I want to have a contactless, and I want to have a touchless experience, and I want to move things to cloud. I want to develop algorithms and do analytics on the edge so that I can give a better experience to customers. And I want to build ecosystems so that I can enhance my capabilities across my organization and become truly, leverage the principle of abundance in this industry 4.0, business 4.0 world. Right. So in that sense, that whatever we are doing today is still, I would call it, scratching the surface on the headroom or the opportunity that we have in the world of digital adoption, right? Whether it is in the area of across verticals, you can see, and across segments, whether it is large clients, small clients. I think digital is kind of hygiene now, right? In that sense that I'm not concerned about what is there, what is left, and what is to be done. And I think, there is a significant amount of deals that we have signed, as I said, all are involving digital quotients, digital technologies, and we are pulling revenues from that as we implement it in phases, as we implement it in the customers, advance their own thinking and agenda and the digital transformation. And we also have to note that digital is fast evolving technology. It's not one single digital technology, right? As technologies come to the fore, every week there is a new technology coming in, and the beauty of that is that as a new technology comes, it beautifully interoperates and interacts with the existing ones. So customers are also evolving their thinking, and they say that, okay, there is a new fintech has come, or new insurtech has come, new regtech has come. Can we employ that? Can we bring it up? And the beauty is that because they are nicely stitching together, nicely integrating, nicely, all microservices based, and we are able to integrate them as we go along in an agile method, right? So overall, net, I see that digital is a huge opportunity, and what we are doing, what we are actually having right now in TCS is only scratching its surface.
Thank you, gentlemen. Thank you to the entire management for joining us. And on behalf of TCS and our 500,000 plus family, thank you for supporting us all these years and staying with us this evening. Have a good day. Hope you and your family are safe, healthy, and vaccinated. Take care.